Hi, Scott. Thank you very much. Please, a quick sound check just to make sure that everyone can hear me. Okay, fantastic. I want to thank everybody for taking their time this evening to participate in our Trade Ideas Trade of the Week. Got a heck of a show for you today. I already told Steve Gomez before we got in, it's going to be a good one. Okay, before we get started, as typical, please understand that Trade Ideas is a software provider, and all the information that I'm going to be sharing today is not a solicitation to buy or sell securities. All the information is for educational and informational purposes only. Without further ado, let's get into something. So when we kind of have different webinar genres. The Trade of the Week webinar is really specifically aimed at finding opportunities and exploiting them. But what most people don't realize is getting into a trade or getting into the right trade is just a very small portion of actually continuously exploiting these opportunities. You really have to understand and know how to do a couple of basic things, okay? So one of these things, and again, just if you want to know why am I bringing this up on the Trade of the Week? Well, obviously, if you guys followed this, we had a Trade of the Week in Sun Edison. And I want to talk about, Sun Edison literally the day after our call, gapped down like 50% from $1.40 where it was trading to like down to 80 cents or 70 cents, and then even traded further the next few days. It was terrible. But none of that should be a problem to you because, again, of course you want the Trade of the Weeks to win. You should be adults and know that nothing wins all the time. That's impossible. So the way that we handle this professionally as active investors and astute speculators is simply by having a little bit of a routine. And the first part I'm going to talk to you about is understanding the difference between risk percent and risk in dollars. So the thing to really understand for this one is to know which one is important. And this is where I'm really going to make sure that everyone understands that talking about losses in terms of percentages may be good for you for one thing or another in terms of some sort of relatability, but you really must understand it in dollar terms. How much money are you really willing to lose on any one trade needs to be something that you have in your mind that, again, you can figure out what that number is, and you can actually even have different numbers for slightly different situations. It's fluid. But you must figure that out instantly. When that happens, you immediately save yourself from the situations like the one that we had in SUNE, which do happen. Prediction versus reaction. What is the difference? This is the other thing that I want to make sure, again, everyone understands because it's so helpful in the long run if you can get this whole prediction stuff out of your head. We spend a lot of time listening to news reporters and CNBC anchors and people talking about what's going to happen, what's going to happen, what's going to happen. Nobody knows what's going to happen until it happens. Now, the key is to be prepared, and by the way, what we just said in terms of having a strategy and a routine is part of your preparation. Knowing how much you're willing to lose at any one time is part of that preparation. If you are doing it consistently, and again, focusing on the process that you're repeating constantly, you will end up winning. It's that simple. So we at Trade Ideas, and I've repeated this multiple times, but I really, again, want to make sure you understand that we reiterate the fact that we are not in the prediction game because that game cannot be won. We are in the reaction game, and we are the best at that. So let's talk about something that, again, if we can, this could be literally the most important, webinar for Trade of the Week if I can get you to look at these four things and really think about them, because again, Trade Ideas is not the only place where this happens. Again, I'm going to make an analogy or metaphorically to golf. Every professional golfer that is very, very good at what they do repeats their swing to basically be consistent so that they can swing the same way all the time, and they want to repeat that, and do it over and over and over again in different situations. They do that by creating a routine that they follow, and good traders have the exact same thing. So the first part of the routine is something that we actually just talked about. How much are you willing to lose? And again, remember, it can start with something simple as $200, $300, $100, but it has to be commensurate with the kind of things that you're buying, your buying power. I mean, that's the part where you have to figure that out. But once you do, you need to really get that number from the explicit memory to the implicit memory. And the difference between the two, again, you can Google it. It's very important stuff. Explicit memory is like when you're trying to figure out, well, what should be the number? Implicit is when you look at a stock that's, you see it and you already know exactly what you're willing to lose for that stock. It just comes to you. It's like instinctive almost. The more of this trading stuff you make instinctive and reactive, the better you're going to do. So for me, and again, this is how I kind of see it. I look at, I look at the symbol and instantly I already know in the background, I know that number, what I'm willing to lose. I take a quick, internal, how do I feel right now? Is it good, bad? Typically, you have to know yourself a little bit, and making investments when something is not good internally is not a good thing to do, because again, that gets all of your emotions and everything else in check. So I just want to make sure that I'm doing it well. Maybe take a little breath. Then I visualize what I want to happen. If I'm buying this stock, I kind of want to see it in my mind's eye where it's going. I'm not looking I'm not visualizing $500 because that's ludicrous. That's focusing on the result. I'm visualizing where I see the stock going. Again, it's very similar to golf. You want to visualize what you want to happen. It hasn't happened yet, but you can visualize it and then put yourself in that frame to, again, have access to that information and get it to yourself quickly. And then finally, it's yes or no. And then you go to the next stock and repeat it. And here's the thing, for me, right, these 1, 2, 3, 4s now are kind of instant. I don't have to consciously really think about all of them. I'm instantly at number 4, and then I move on, because I've taught myself to do this over and over again. So often I find that beginning investors, traders who want to get into this game, they find themselves staring at charts and looking at trend lines. But all of that stuff actually should be kind of done, and we talked about it before, very passively. And remember that it's all subjective. It's not the trend line that should make you purchase or not purchase, or short sell or not sell. It's all of this coming together, and then it needs to kind of be instant. Again, the more you hesitate in the investment, the less likely you're going to successfully manage the trade and get the price you want. So it's a double-edged sword. Hesitation leads to tension, which leads to not doing it at the right time, which again kind of forces bad things on itself. And anyone here who has played golf or any kind of game that requires concentration knows that this thing that I'm talking about, it's applied throughout all high-end professional endeavors, whether it's art, sports, or whatever. People, you want to get into that kind of zone for trading, and you do it through the methodology I just said. So the quick thing with SUNE, and just a reminder, what is it that we were looking for and why were we there? Just again, really quick. So this area right here was a support area for SUNE, and then it started to move higher. And again, this is where it triggered the trade of the week, because this was actually a void fill right here, and that was the trigger. Again, there was enough stuff that had happened in the past between this and this and this and this that made the AI feel that this was actually a pretty good statistical bet. So when something goes wrong like this, right, this is where, again, you must know that these things happen. There's no way to control this element because it happened in the future. It happened after the closing. You couldn't have traded out of it. So, and knowing that those things happen, the only way to mitigate that risk is to have been in the, basically, what is the maximum amount of shares that you should have bought to avoid losing, like, you know, a lot of money. You know, so for me, I could say, you know, if I bought 1,000 shares and this thing gapped down to zero, you know, I would have lost $1,400. I wouldn't have liked it, but it would have been kind of okay. 500, even simpler. Remember that we are specifically looking for volatility. And volatility in the smaller names is often in the 20, 30, 50, sometimes even 100% area. I mean, look at the ride from 6 to 50 cents in 1, 2, 3, in 3 months. That's a pretty significant volatility move. So the idea, that is what you want to be in. That's what you want to find. So what I'm going to do now is I'm going to start going through other candidates that I have, and I want to kind of show you a couple of things that are important in what we identify that other people really don't, so that you can, again, just see different bits of ideas that are very similar conceptually. So one thing that I wanted to showcase today was that there are these stocks. So here's the funny thing. When you see how much something is up for, you know, a 52-week high, what you have to remember that 52 weeks is not calendar. Hardly anything is tracked on Wall Street in terms of January 1, except for the funny fact is that we all pay taxes that way. So I always like to start everything over, just like, you know, my personal tax here. So we are showing you like what's done the best since January 1. And this, I don't know what the hell that is, because it looks like it's probably a typo of some kind. I'll move away. But so, okay, so here are some of the links. Hercules, VLTC. I mean, again, just remember that you got to remember where it was on January 1 when it happened. So CPXS on Fuego. So this is what that looks like, and I like keeping these numbers because it shows me some things that, again, I otherwise would not be aware of because the calendar is done a little bit differently. Okay, and you can sort and resort this information by things that are closer to the highs of the day. So you can always see, like, again, if you're interested in things that are doing well but also strong today, this is the sort view that I look at. And again, here you can see some of the interesting names. You can see that there's some, oh, this is a huge gap up. Here, LightPath is trying to wake up a little bit. So one of the things that we're working through is there was an issue with our fundamental data that we had today. So some of the numbers are probably a little bit off. I'm just looking by it. Again, although it's weird because I don't know. Some of them look perfect, like this one, and some of them don't. Either way, this is one of the list if you're a subscriber or if you're working with us, I do personally, I'm always looking back and forth between what's doing well calendar year. Calendar year allows me to catch some opportunities that other people aren't looking at, and again, it's an advantage that I'm going to demonstrate a little bit later when I know that the data is at least correct that I'm seeing. So, okay, let's move over from here to more of, again, candidates that are on the trade of the week kind of pattern recognition. And I made a specific window that I really wanted to showcase here. Again, because of a sort. Let me move it all through. Okay, here we go. So this is called at the turn. So what I specifically did was I used a position and range sort here to look for things that are up today and are starting to kind of turn around. And again, we have called some of these before, but that's okay, because if that happens, all that means that the base is building at a higher price. So we had mentioned GoPro really looked like it was trying to stabilize. And if you look at this, I'm going to kind of zoom in. If you just saw this action, okay, without the gap down, this almost looks like everything is kind of okay. So that's why this window, in my mind, you know, puts some very interesting names in front of you. What I'm going to do is I'm going to, again, put some different limit alerts on here so that everybody here can see where would, in my mind, again, be kind of the next buy point or the next area where the AI would probably be looking at it. And again, I won't know, but this is the high level. So I'm going to say like right around here, 1370 is really like the next entry to test this area. And if we zoom back, here you can see we're fully back into the gap, and there could be some really interesting potential if we cross this line. So the other thing that I'm making sure everyone knows is that every one of these price alerts will be shared by me. So if you are a subscriber, you simply just need to ask me and or ask via email, and we'll set all these up for you. So let's take a look at Jack in the Box. Kind of a similar thing. There's a lot of volatility in the food space. I mean, look at this. So this is another important lesson. Why it's not just pattern recognition, but you really have the risk controls on. Look at this situation here, which looked like a perfect, it looked like it was really going to test this area and go, and then gigantic gap down, followed by a huge correction where it really started to fill the void completely, and then traded all the way down. And now, again, once it hit, look at this, see, it hit this support area and came back up. So now it's on our radar, and I'm going to put the buy figure right here, and we'll say this one hungry for Jack. So remember that on these webinars, if you are not a Trade Idea subscriber, and again, they're meant for everybody who's on the Trade of the Week email list, write down these names or, take pictures of the screenshots. These are things that you want to be aware of, because again, the potential here is high. So let's look at SDRL. Okay, see again, we like this is a great example of volatility that is good to exploit from a statistical point of view. You had this gigantic move from $1 something to 7, and stability at 3. You see, like this is, I mean, again, nothing that I'm showing you here is really, whoops, I've done this like twice at a different, keep putting right click, trend line. Okay, so here we have really starting to fill the gap right at this level. So that's really the level that like something crazy could be going on. But right before then, you're at this wedge. So what I can do is just move this a little bit, redraw it over here, and then go again and, oops. And now I'm going to redraw the bottom and talk about just volatility as it relates to large moves to either upside or downside. A lot of times this behavior, this kind of wedge flag pattern, and we are not the only ones to observe it, all this means is there's just like this pressure because your eyes are telling you what's happening. This volatility is creating some pressure between the buyers and the sellers as the people who initiated this whole thing, they're wondering, is this real or is this not? And the people who are selling it are hoping that it's a bunch of BS. But again, we won't know. The beauty is that we can just react very well. And here you can see, okay, I can just go right here, right click, and call this the broken wedge up. So again, you are able to now sit here and just passively create great opportunities for yourself just combing through lists leisurely. And this is really the way that we see technology should be applied. So here you have a stock where it's gapped down. So look at this gap down it had. You know, there's terrible news over here, but it's starting to claw its way back. So we can move. What's really nice, again, when you use trade ideas is see how I can kind of create alerts for myself at different price levels. Like I definitely want to be alerted here, where just completely, if it gets here, if HPQ gets here, this is gigantic area to fill. So I definitely want to be here, and now I'm set, and there's no way I can miss it. But I want to tell everyone right here that this is very, very important price action. In fact, this is another example of the beauty of what you can do when you're just simply, you know, not overthinking it, but just seeing exactly what's happening, which you can draw for yourself here, is yet another, like SDRL, another wedge. Except this one's even tighter, and to some extent, there's probably quite a bit less risk because most likely Hewlett-Packard, I mean, as bad as this news is, most likely everything is, you know, discounted. Like it's not going to go to zero overnight, although again, things are tricky. But look at this. This is what I want to focus on. This is what we're seeing, and this is what we're trying to exploit. Okay? So it's happening here, and the first exploitation is really right here. And we call that the first exploit. Okay, so now we've got HPQ all covered. Another one that looked really interesting, and this is something that I discuss in multiple webinars, and this is really one of the things that our artificial intelligence engine does already for us. But when you look at this, you kind of see, again, a fairly jagged edge, and it looks kind of uninviting. But what happens when we zoom out a little bit? It's a slightly to a completely different picture. And I want to draw a couple of interesting trend lines just so you can kind of see the same things that I'm saying. Number one, Whole Food Market was a darling. And, you know, as part of the profiling, you need to understand that this, you know, that's something that is interesting to know because a lot of investors know all about that whole organic and all that stuff that Whole Foods is very famous for. Nevertheless, it's been getting annihilated. It's got some negative press. People are making fun of them. And so let's connect some dots. So what I just did, because again, you don't really want to cheat yourself. So I took this high, connected it with kind of all the highs here, and then with the next high that was further down. So this trend line was actually broken over here. And then Whole Foods retraced back to the trend line. And what I really love about this is that this is kind of like trend line truth. You know, it's so easy to just take this and go, look, this is the trend line. Well, yes, it's one, but it's not the one you would have been drawing in real time. You know, the one that you would have been really drawing more closely would have resembled this. Now you can do some changes, or rather you can see a little bit of a different picture. The beauty about trendline is that it is an art form, and there's no limits to how many you can have. So here what we're seeing is, now again, behaviorally speaking, right, you can kind of see like there is a lot of downward pressure, no doubt. But look at this trend. I mean, this is a very interesting trend line that, you know, the angle of it says, you know, that there's still really quite a bit more to go, you know, before we get through this downside. But now if I tried to connect this one and this one, or this one and that one, now all of this, okay, this whole thing, so I'm going to move this right here. Just again, different perspectives. And behaviorally speaking, once again, you're seeing the wedge. So we sort of have an interesting point of view here, because we kind of see our downside and we have to break to the upside. Now, for me personally, like, I'm not going to short sell Whole Foods in this market, which still seems very bullish. So what I'm going to do is I'm going to give myself a price alert right here, 34. And go, no GMO. Steve, maybe you appreciate that, you know, on GMO? No? No. Okay, so now it's all set and Whole Foods is ready. Let's see here. Okay. Mosaic. Definitely an interesting one for me, because remember that you can kind of take what you see on the longer term and also be looking at similarly on the shorter term. So here you don't even have to draw trend lines. You can, once you're decent enough at it, and that's kind of what, you know, I feel like myself and some of the other team members, we don't really need to do this visually. We see it, you know, but I'm just doing it so you can kind of see where we're coming from. And I'm certain that Barry does the same thing in his mind too. You kind of get a little bit of a savant sense about which angles feel right to you, and that way you can be like, okay, I kind of see what's happening, and it gives you sort of an interesting feel to both the risk on the upside and the downside. Like if you got into this here and you were over here, I mean, then it no longer really makes sense. So that's actually a pretty small move, if again, being on the 5-minute time scale. So just keep everything, you know, in perspective, look at the scale so you know what you're dealing with. But here you can start with a nice price right here. Just looking to go higher. There we are. So again, you can see here, like what I like about this is that, you know, I like the notion of zooming in and out of things because it really lets you be, and a lot of people people spend so much time focusing on the pitchforks and the Kelters and the RSI and what's the slope of the MACD that you've got so much crap on your chart that you completely forget what it is you're doing in the first place. And for me, I see what's happening here. We have this huge consolidation, a move, another base, and we could be testing this. So that's kind of like, you remember what I was saying about I'm visualizing? So if I had bought this, I'm kind of visualizing a breakout above here. That's what I want my intuition to guide me to. And while it may sound like a bunch of hokey pokey, that's really how professionals who succeed at almost all levels, that's how they do it. Okay, so let's look at another list where I'm going to give you some more names. So I'm upgrading my mic. Don't you guys worry. But I also hear that most of the time it's pretty decent. I think part of it is really my fault because I get so animated when I'm doing this with you guys that I'm actually moving around, even though I'm not sitting at my computer terminal. I'm animated, walking, talking. So sometimes I think that's what really happens. So let's look at, hey, you, look here. So this window that I have is a window this window that I have sorry about that, my security system went off. And Don, correct, I no longer have my cough. So this is one of the really nice things about working, again, with my own software is that it teaches you when you're doing stuff, like your homework really matters at Trade Ideas. And let me really explain what that means. So a lot of you are here multiple times. Yeah, you've been here almost all the time. So you see me when I make these alerts and I tell you like why I do it and like see this price level, what's going on, et cetera, et cetera. And what's nice is that you can then see, what happens with you, good or bad. When it first hit this, look at that. Nobody would have been holding it here, but you are alerted to the fact that, again, it's in your wherewithal. And when it crossed here again, because I do multiples of these, once again, I was like, hey, this thing is really, the action is still there. And then finally, today it went again. So this is how this works. It's like, it's beyond just, us, hey, buy IBM. That's not really professional speculation, eloquent speculation. Equities investing, the way we are doing it, is much more like chess, where you're kind of thinking a few moves ahead. And one of the ways that all of us here, one of the ways we stay ahead of everybody else is because we have better reminders, better mnemonics that are helping us catch these moves, mnemonics that you can also then grab and move. You can put it right here, and now it's like, when this goes up, you're looking probably at another 100%, because that's how small the float is on this, and that's how crazy these stocks can get, And also, look, just another quick, what I did with my eyes, I took a trend line and just kind of, seeing what's really going on. Sometimes, again, it just tells you. The important thing is not to lie to yourself. And part of it, of course, is also when you start doing it. A lot of people, again, draw their own perfect trend lines, but you have to remember that you would have been seeing it, like let's say, like right here, you would have had to have extended it towards that spot. So I got to make sure that I'm still touching this area so that I'm not BSing. And here we go. So look at how interesting this breakout was. These are the key two straight lines here. Critical to be able to see this and be alerted to it again. So I didn't do it on this one because we didn't have limit alerts at this time. But what I like to do a lot, and what I plan on doing, because by the way, like if you take this, I can't really do that. Here, let me use this. Like if you're like right here, let's just look at this for a minute. This is what so many people forget. So when you are right here, which happens in real time, nobody is thinking that this company is going to do anything good. In fact, you're thinking, when are they going to file for bankruptcy? This day right here was a good day, but it's had that day before. It did a little cry wolfing, okay? And I'm just trying to make you see, you know, then all of a sudden, like again, it really starts to pick, your eyes tell you like, hey, look at this, we're in a new range here. Some braver people came in, and then just craziness. Now you're opening yourself up to a whole lot of volatility. But guys, this is, again, remember my whole explanation earlier about how much can I lose, okay? If you can lose like $400, and assuming that, you know, this thing could really quickly go to $1, you know, you need to make sure you're only trading this at 300 shares or so, or whatever the math is, maybe 100 shares or so. But at least that way everything is controlled. You know, then you know these fluctuations you can handle, whatever that amount is for you. I mean, when a stock is moving like this and you are investing in it, and I love these, there's no reason why you shouldn't be necessarily, but you have to play within yourself some amounts that you can handle the volatility. So that's, again, a critical key component. So another one that's on our radar and everyone else's radar, OXGN, because this is just very unusual behavior. Let's take a look back, and once again, let's do the same kind of exercise that we've done a long time ago. Like, look, all this tells you a lot of potential and a lot of pain. And notice that this thing's tried it so many times and failed and failed and failed. But we are not predicting, right? We're reacting, because it could have done it this time, and it can do it again this time. The volatility, the possibilities are huge. So the hint that it's giving us that something's going on is this gigantic move today. Okay? So what I would say here is, I'm going to go back to, let me see. Oops. Okay. I'm going to go back to like right here and say right above 85. Oh, forget that. Let's go to highs, 90. Right above right here, so it'll be the same. So again, it's what I feel, looking for a go. That means this thing, whatever it was that was doing here, and I like these volume bars, again, as a hunter, it's there again. MZOR, robotics, everything is going robotic. I mean, your eyes, like, let's just talk about this real quick. I don't have to do anything. All I do is squint, and this is where professionals came up with a term called the double bottom. Now, the problem is that it's an oversimplification. Many times a double bottom is actually a 1, 2, 3, 4, 5, 6 bottom, really. But we tend to just lump things together. This is also, I can't really say it on the webinar, Steve, but you know what this looks like? This is the dreaded goat milking pattern. It really catches people, and once you get it, you know, right here, when you're right into the nipple, oh, terrible, because then you miss right here. So with all humor aside, let's mark it up really quickly so we can learn something and make some money. So again, I've connected these two dots. Interestingly enough, again, let's make sure we are not fooling ourselves and not doing like that beautiful magic where you go back and you're like, oh, let me go back from here and connect all of these trend lines. Oh, now that's, yeah, you know, that's perfect. It's not really how it works, okay? You want to make sure that you are not really lying to yourself, and doing it, part of the not lying is not picking perfect peaks, because again, it's not a game of perfection, it's a game of estimation. A trend is visually estimated to give you, again, a better sense. These moves are gigantic, okay, but still look at the share size. Nothing extraordinary yet. Just imagine if some real volume comes in. So we really want to do a couple of things here. Number one, we want to not, I want it to come back. So possibly get over here. So I know that I was looking for this pullback. But I also, if it doesn't pull back and it starts to go again, I'm going to be a buyer above highs. I'll even say 95, and it is on. Okay, so now we have the two things that I want to see. And if you zoom out, what's kind of interesting is, I mean, first of all, robotics is the right business. Look at the bigger picture. Okay, once again, I'm gonna take this trend line that we drew here, right, and I'm gonna then go back over here and talk about the fact that, you know, we really are trying to set ourselves up to maybe clear this very long downward trend that's been, you know, that's been happening this whole time as the whole market's been coming down. Look at the double goat, one over here and another one over here. Okay, so remember, everyone, everything that I'm doing here will be available to you. My limit alerts will be available. So let's look at this. You on demand. You know, what can I say about the fact that where, quote unquote, the action is? Okay, and if you look at this kind of volatility, you have to tell yourself that you should be aware of it. It doesn't always get up to 1 million shares, and you can see that possibly there's a lot of interesting demand here if we can clear this resistance. Okay, and that's what it really tried to do today, but failed. So for me, 228 and UOD time. Okay, so that's a big move, and that's where I'm going to set this alert. Let's look at this one. Okay, notice that I'm giving you a window that is titled, hey, you, look here. Everything on here is supposed to be very interesting. And that's why you guys are here in this webinar, because we're not here to look at Facebook and Twitter and Apple. You can do that anywhere else you want. We're here to find the things that are, you know, going to be possibly going a couple 100%. So I want to, part of this, the reason you're at the webinar, hopefully learn something, is moving back and forth in time visually is critical to be able to kind of understand. Look, each one of these is a day. 1, 2, 3, 4, 5, 6, 7, 8, you know, here I'm going back to December 2015, and if I'm just doing that, then I don't really see the big picture, even though there's quite a bit of volatility, like 200% of worth almost. But when you really zoom out, that's when you see how appealing this could be if something could get going. Look at all of this that had transpired. We want this action. Now, here's something else that's really kind of good. Okay, so when I'm making a trend line, and again, I can make them do several things. Here, I'm just going through the large congested areas. So that's one, and that was broken around here. That's good to know, because sometimes it takes more than just one trend line for a trend to really change. And this is some of the things that we already program into the artificial intelligence so that it recognizes that. So now going a little bit, once we get rid of this problem, okay, now let's connect a few more. So here, I'm going to connect these high points. And now you're seeing, really now we're above this trend line, and it really created kind of a nice horizontal base. And to me, what this says is this is a flushing out of the risk. The risk is getting removed because the stability is risk off, volatility is risk on, and all of a sudden some good news could be coming out. So here, I like this enough to where I want to get it kind of quick and be looking for this thing tomorrow. Doesn't gap up, like right here. Fire-breathing dragon. Okay, we have our list. It came, traded up through there, came down to it, but I think that it's going back there. Really, really like this action. Again, if you're not a customer, make sure you write down the name and look it up afterwards. So what I'm going to do now is, again, I think we covered a lot of different names, and remember, that's what we do on these types of webinars. What I'll do right now is I'll take like 2 minutes. If you want to tell me something, I'll look it up for you and put a price limit. So Doug, yeah, we're going to give you the add the turn window, and hey, you look here, just shoot an email to us, and I'll have that email information for you at the end of the slide. So are there any stocks? Let's see, Leon had made a few comments. I'm going to pull up some of his name. GBL. Yeah, Leon, great stuff. So for me on GBL, this is a void filling, and Leon's one of our members. He's active participant in Trade Ideas. You're really benefiting from him being here and pointing these things out. So simply put, I would just come over here and I would say that we're really kind of ready. So, it's just a question of how you want to tie up capital. The real move is right around here. When you've cleared everything, that's where I say 100%. So that's GBL. Let's look at IMPR. Okay, I already have that one, I think. Okay, yeah, IMPR, it's already starting. So in reality, it's great that it's here. Everything here is good, and you basically want to hold it with a risk of getting, you don't want it to close really too much below 1250. So I almost can't put an alert in here other than a little bit higher, or somewhere right here. Filling. So do that. Let's see here. Okay, guys, let's. I want to make sure, because Scott still has to do his part of the presentation, so I'm going to cover just a few of these, and then we're going to move on. Remember, we do this every Wednesday, and Steve's going to do a lot of these too, and this is a format that we're going to continue to follow. So super easy. Okay, real quick, BIB. Nothing going on yet. If I was a buyer on the index side, it would be right here. And I would call this starting. So that's 256.09. Okay, right there, and you can see it. So that's just a little bit away from where we are now. CPXS, everyone loves that. So we'll go, again, we've been in this one many times. The trick with CPXS, guys, is that there's no, there's really, it's obviously something crazy is going on and it's moving up, but the volatility is so high that I would say that, you're really doing much more of gambling here than anything else. So I'm deleting these alerts. Let me read changes. Let me see if I can be less emotional about it. So, okay. Like right here, 1085. Okay. So right here, and again, that's saved, and we'll share that with you. Let's see here. So when, okay, I mean, when is an interesting one because I really would have preferred to be in it here, and this was really the kind of move you wanted to be in, and this is what we look to find. Like most of our trades of the week, the pattern that we are looking at is this pattern. But I just want to show you how it materialized here. I mean, again, you grab these two guys. I mean, connect the dots, and here it is, and you could have felt at least a little bit comfortable as long as it didn't close above there. It's a great move. At this point, I mean, I would say you're just trying to buy the pullbacks because it looks very, very strong. So let's see. I mean, oops, I can't spell. Xenia, huge volume. I mean, I'm not a big fan of what they do. I don't ever think it's going to here again, but it's not for me to think any of that. So let's just look at it impartially and see what's going on. Love this right here is very important and good. So for me, okay, you're talking about it like right here. Clear skies. So that's where I would have it. Okay. That way you're trying to really get through and contest this area, but there's enough support. So everyone, I want to thank you for this hour of your time. I'm hoping that you can see how we, just keep going through the process of finding these opportunities, and soon is actually a great lesson if you can learn something from it, whether you were in it or not. If you were in it, hopefully you were able to manage your risk. And if not, the lesson to learn is the proper risk management. Because without that, you really have nothing. The other thing that I really want to say before I give it to Scott is that we don't only support our product mechanically, but we have a whole community of active, engaged participants that are here and are trading and investing actively, and we are a great resource because we have an amazing moderator that, there's no spamming, nobody's talking about their dogs and uncles, and there's no fighting. It's really a great place if you want to just be with like-minded individuals who are looking to work their capital in the market and have a great time during the day. Again, Barry Anderson, fantastic moderator, always there, always helping, passing out links, sharing strategies. Jamie and Steve are in there as well, so I really want to make sure everybody has access to that. It's free, whether you're a member or not. Scott, why don't you take away the show?
Yeah, it sounds good. I'll just kind of close it out. Thanks for everyone for attending. Hang on for a moment. I'm going to give you some discounts also in a moment after I just really quickly tell you how our pricing is. Trade Ideas is a software as a service company, and we're $99 a month is our core subscription. That includes all your data and exchange fees, the charting. Very importantly, also a full hour of one-on-one training with screen sharing. So as soon as you subscribe, sign up for that on our support page. Go to support, click on training, select your time and date from the calendar. It's really easy. $888 is the annual price, and that saves you a lot over the $99 per month. It's all the same great stuff as in the $99 plan. A little bit savings overall. The AI channel, in order to get the functionality of the AI channel, back testing tools, the new price alerts, all of the high-end functionality is a one-time license. It's $1,100 is the cost. It gives it to you for life, and all you need to go along with that is an active subscription for the data, so it all works. And here's where it gets good. I want to direct your attention to your handouts panel on your GoToWebinar interface. There should be a PDF download right there waiting for you that'll have this slide and the next one too, so you don't even have to take notes. Just download that right now. And you can use the code HOLLY, H-O-L-L-Y 30, and that's capital letters because it's case sensitive, so it's HOLLY 30. And that takes 50% off your first month right away. No contract. You can try us for $49. Get in on that hour of training. Everything, attend our webinars and find out how to use the product. But it's really the best with the OddsMaker AI license, and this code also takes 30% off of that. So you can get that lifetime for just $770 instead of $1,100. Big savings. Or get into a year for $710 for your first year, 20% off. Really great upgrade if you're on the monthly plan and paying $99 or even $75 if you're on the older monthly plan still. Switch over, get it for a year for $710, saves you a bundle. And then it renews and you're locked in at the $888 even when we raise the price. That code's good through the end of business on Friday, this Friday, April 1st, and it's not an April Fool's joke. So, but here's a really cool thing about this code and how it affects both the yearly and the AI license together. And the next slide shows that. Lets you go if you go to a link that takes you to a bundle page where you can get the bundle of the year and the AI license together and use that code, the combination of the 20% off the year and the 30% off the AI saves you an immediate $508. So it's only $1480 for the whole thing. That bit.ly link is the easiest way to get there if you're going to type it in. Otherwise, if you've downloaded the PDF, just click through, and it has to be typed exactly as you see it. It's case sensitive, so bit.ly/AI Holly, all in caps. That saves you over $500. It's a really great way to do it. Fantastic upgrade from the monthly again. So any questions? Email us, info@tradeideas.com. Follow Dan at TradeIdeas1 on Twitter. We also have Trade Ideas at Twitter. Find us on Facebook. We sometimes post some information there that we don't share elsewhere, so it's a good thing to also follow and keep up to date. Best place for questions is the info@trade-ideas.com. Goes directly into our help software, and we route it to the appropriate Trade Ideas team member to help you out. Thanks, Dan.
Scott, I'm going to do a quick, somebody had a question about what is Holly, the AI, so I just want to let people stick around. I'm going to answer that just real quick. So for anyone who's interested, the big thing that we've innovated with in the last, 3 or 4 months is that we've launched a complete artificial intelligence engine, which is in our server room, and what it does is it's like a card counter in Vegas. It's looking at all this data in the market that happened today and over the last few months, and it's trying to put together what kind of strategies it would use or what kind of an approach it would use to be able to exploit what was happening in the market. So it learns from how we did today, readjusts itself, and is ready to go tomorrow. And there's basically 45 strategies that actually live within the AI, and they all compete amongst themselves for helping you figure out what's working. And again, I would say, we had an open house just recently where we were showing everybody the actual stock picks in the AI are only just one of the small things that are the value add of it. It brings stocks to your attention that even if the AI loses money, you can then use the limit price alerts that I just showed you, where you can put in a price level that makes sense, and then none of these very high statistically viable opportunities go away. Sometimes it takes a little bit longer, but then they rework into what they were doing. So it's basically the most advantageous way to invest. Again, imagine you were going to the Wynn, and when you went to the blackjack table, you sat next to or had a card counting machine that was digitally tied to the deck and only bet when the odds were the most in your favor. Now, that's not going to guarantee that you're going to win, but you're going to have an edge over the house. And that's what we're here to do. Well, Rick, yes, absolutely. You can follow that. The Holly is designed for people to follow her manually. So we made this AI and we made this technology specifically not so that you have to be at a computer right away, or the idea is that we wanted something that humans would be able to follow. So she invests in such a way that not only can you follow her, but sometimes you can trade around her and actually get better price. She'll get into a trade, you'll watch, and when you see it being down, let's say a trade is down 30 cents. okay, just hypothetically speaking, and you're watching, all of a sudden it goes from 30, now it's only down 10, now it's only down 5, and you're like, well, you know what, maybe now I'm going to get into it. The market looks like it's going up. You buy it, you're 5 cents ahead, and she's kind of showing you the way. And that's what it's for. That is what it's designed to. It's like your Sherpa. It's your navigation, but it puts P&L as the tool for you to navigate versus just stuff that you've been shown to use for years before anybody knew how to really work the market. So it's both intraday and swing. There's no, again, people in our room do both. They trade things longer term and they trade things intraday. It just depends on what the alpha situation is. But Holly, the AI, the way it works is it starts flat every day and finishes flat every day. So that way, nobody who buys the AI ever says, "Oh, well, you know, I missed that great position that is all of her P&L, and you know, all of her money was made like last week." It always starts from scratch, but you can keep the positions if the P&L allows it. So.
Yeah, you should just log into the trading room tomorrow and kind of follow along. You can check it out. And Mark was asking about Scottrade. Yeah, Mark, we're inside Scottrade, but not the AI. It's only, I think it's $15 a month in Scottrade, and you get the alert windows, top lists, back testing. I think that's
Right, but the higher level functions are not there. You don't get the limit alerts, and you don't get the artificial intelligence, and I don't think that Scottrade's going to move to add that. So
yeah,
again, I would.
Yeah, it's a little bit older. You know, it is what it is. We have the newest stuff in our direct download that's directly available to subscribers from us. It's always the newest.
Yeah. Well, Rick, again, the first thing I would do is for sure go to the trading room. And again, you don't need to subscribe. It's free. And there you can really get a sense of how we operate and what we're all about. And again, then you'll figure it out. All right, guys. Thanks, everyone. Really appreciated your time. Take care.
Yeah, thanks, y'all. There'll be a recording up later tonight or tomorrow morning. Bye, guys.